How are you now? It's the Theory of Thing Investment Podcast. My name is James Whelan. I am the Managing Director of Barclay Pearce Asset Management, general all-round good guy and wearer of hats, drinker of coffee. I am joined by Heath Moss of HLM Investments, our token South Australian. Heath, how are you now?
Very well, thanks, mate. Good afternoon, good evening, good afternoon, good morning to everyone else out there, depending on when you're listening to us.
Yeah, it's currently the time is 1:34 p.m. Australian Eastern Daylight Time. It is the 26th of October, 2023 AD. Everything that you hear is general in nature. All the advice. I'm never.
You didn't stuff it up. I was waiting for it.
That was okay. I'll give that one 7.5. Difficult degree of execution on that one.
No advice generals this time.
Yeah, no advice generals. All generals are advice in nature. All
Exactly.
microphones are not. It's mate. Off. And the next big thing, the 28th of November. If you're an advisor, any of the advisors that listen to this thing, if you are an advisor, I am presenting at the Ensemble All Licenses PD conference. That is coming up this time next month. I've done a run through of the presentation. I'm naming names. It's about the client trust proposal. When client trust has gone well, when client trust has gone badly, who was responsible for what, where were they, what were they wearing, what were they drinking, what were they smoking. I'm naming names. No one is safe from what I'm going to be talking about. It's going to be absolutely scathing. No, it's going to talk about real stuff that we've done. So please, if you have the chance to get along to it, go online, ENSOMBL, Ensemble. Register for the thing. It's all good. If you want a free ticket, I'll probably be able to hand you a free ticket, but just you'll be able to get online and check it out anyway. Worst case scenario, just go and register and check it out. Okay.
An easy 10 CPD points for you for the year. A quarter of your CPD points. Get involved.
Pick a quarter of your CPDs. I think I've got to do 50 actually because I'm a responsible manager, but that's a whole different story. I'm wearing a hat here, Heath. I know I don't want to make it all about me, but it has been. This job is satisfying. Heading up this thing is satisfying. Everything that I've done in my career has led to me doing this job now. Yep. It is a massive gig. Even I sort of had underestimated just how colossal this thing actually was that we're putting together here. So it's pretty cool what we are doing. You're going to love when we launch it. You're going to absolutely love what it is that we're doing. And then I get to just have more of the work of sort of just telling people what it is that we've done, which is great. It's going to be fantastic. So we're going to start to see more and more of that as we go along.
Look forward to it. It's any chance we get to get differing views on markets and financials, etc. is fantastic for us and for the listeners out there. No one wants to listen to us. Bozo's gone forever.
How are you? How are you faring over there in Adelaide, mate?
Yeah, fantastic. I mean, it's the week started off warm and it's got bitterly cold again with the southern ocean winds coming in and. Yeah, we got the second week of school, so coming back, so back into the grind of things. Nothing too exciting, mate. I mean, when you got 3 kids, one's under a year old, or she turns a year next Friday. But when you're in that situation, that dominates your life, and you get into a routine and you stick to it.
Yeah, that's about it all. Okay, footy tips will be at the end. We took a bit of a beating, so much so that I actually received a pretty, not a stern, but it was a friendly jibe saying, "Hey, put your training wheels back on, pal." And here's some tips. It was constructive criticism with the way that we've been tipping the football. But he said, "You know what? I'm going to have a go. Follow my tips this week." So he's put together a whole string for us, which is pretty cool. Thanks very much. So we'll get to the end on that one.
Fantastic. Should we get stuck into it? Stuck into markets?
Yeah, mate. Go, mate. Go. 20-minute podcast. That's our new rule.
Yep, beautiful. You push the buttons, you get the charts up.
That's right.
On
yeah,
the
you
screen,
start talking.
and I'll talk about them. So it hasn't been pretty for the markets. We all know that. I think the SPX is down about 1% for the week, but it was down a couple of percent last week as well. Earnings, we're in the middle of earnings season at the moment, which, I saw Scuddy tweet the other day saying, the risk of earnings moving the markets is gone away. And that's probably true. All the big guys, we had Microsoft, Google, Facebook, etc., all report, and they all came through with glowing colours. And I'll cover them a little bit more in detail a little bit later. But it's all to do with those yields. We can see here we've come down quite sharply there and I'll bring up the long end of the yield. Where is it in my thing? There we go. So we touched just over 5% earlier in the week. And we came off. There was a bit of buying. A few people, obviously 5%, 10 years risk-free, pretty attractive. And since then, the yields have bounced again on the back of probably, some hawkish comments from Power, probably more hawkish than we'd expected. And just generally the liquidity in the market, of course, is playing a major factor with all these new T-bills, well, not T-bills, new bonds issuance, etc. And so, and then just investors wanting a higher term premium for their investment to invest in, US Treasuries bonds. It's as simple as that. Of course,
it's a simple supply demand issue on that. If you just, like always, we're trying to tailor this podcast to everyone, but it is a simple supply and demand. A whole bunch of new issuance coming on from the Fed or Treasury or whoever.
Treasury
things. They, those are at a higher number. People, you see the same thing, for example, going on in the hybrids market now. You get new hybrids that come out; they're at a higher number. People are going to dump the ones that they've got in order to go and get that. It's just that just if you want to keep it simple. I know there's going to be 1,000 things that make that sort of alter that sort of thing, but it's that simple supply and demand situation. Heath,
and we don't have Japan or China buying US Treasuries. They're actually net sellers of US Treasuries.
They're offloading. That's right.
Yep, they're offloading. And we've had again hotter and better economic data than expected. Last night we had services and manufacturing PMIs in the US. They beat consensus and are above the 50 mark. So showing expansion there. We also had new home sales beat. I mean, God, mortgage rate. I saw a chart the other day with a mortgage rate at 8.3%. It's like, who the hell is fixing their mortgage rate for 30 years at 8.3%? God knows. But
I think it's the reasoning that was attached to the new home sales as well, from just sort of thinking the 8,000 podcasts that I listened to in the morning, that there was incentives that were being put on by builders to offload these things.
Oh, okay. Yep.
I think actually, like I'm not sure if that's enough to be able to make that number up, but that sounds healthy.
It's actually probably a signal that the builders are maybe starting to struggle, and new work coming in is a bit scarce. When you start seeing incentives come in like that, and actually we're starting to see that in new car sales here in Australia. I've seen a few adverts advertising with $2,000 worth of extras, etc., etc. So when that stuff starts to come in, then sales are starting to falter. So we've had yields go again. That's obviously pressuring markets. Oil, I mean, for all the talk and the blame that the Israel crisis has been given for the action on the markets, oil couldn't really give a shit, really. It did bounce up to over 90. Actually, that's the US. I'll bring up Brent because Brent's more relevant because it's seaborne.
Yeah, we got by Westy for that, didn't we?
Yeah, we did. In 94. And it's come right back down there to about 88 at the moment. It is off its lows, but I mean, really, to me, I don't think the markets really care about Israel. I don't think economically it makes any sense. If they weren't going to care about Ukraine, Russia, which had much more impact, then they won't care about this. It's, for me, energy. There's an energy glut at the moment. We're seeing gasoline inventories rise and demand fall away there. We've got a lot of gas in the system at the moment. The EU, obviously, their inventories are up at around 98%. The US is exporting more every day. Australia is obviously as well. So, but yeah, the whole industry just seems to be a bit of a glut in energy at the moment, and that's suppressing energy prices, I think. Yeah, you go ahead.
I am going to take sort of the other side of that equation for you, in that I think that energy is a great buy, but not that commodity. And I think that the best way of doing it, I still stand by the fact that although I don't do the day-to-day stuff anymore on this one, I still stand by the fact that I think that the best leverage, not only to this, to be able to hedge your bets on this, is to buy the energy players. So, for example, that fuel ETF, which is run by Beta Shares, which I used to be able to advise on until now they're a really big competitor of ours. We'll get into that later. But that fuel ETF that owns the energy providers underneath, not only are they printing money and actually selling this, so they'll be leveraged to the upside in fuel, but they're also making the acquisitions in the renewable space and also leading the way in the renewable space as well. And I think that you want to have a big portion of your portfolio dedicated to renewables, and if you don't, then you're going to miss out. It's like imagine not having a small portion of your portfolio dedicated to copper. Knowing what you know of the world and where things are going, you have to have a small amount dedicated to that particular thing. Renewables is the same, and I think that one of the easiest ways of playing it, so you can play that both way game of going, if oil runs, I'm good. If these companies continue to do what they do, I'm good because they're still going to be paying those dividends. And if they move into renewables, which they are, and drive that, then I'm also good. So there's my little tip of the long-term investing of the week. And that's your each way bet.
And Chevron and ExxonMobil actually agree with you. I mean, Chevron just put a bid in for 60 billion or 65 billion for Hess over in the US, and ExxonMobil a couple of weeks ago put in a bid around 60 billion as well for Pioneer Natural Resources. So they think these energy companies are looking cheap. I mean, they know their own business and sector as well as anyone. And even something like here in Australia, Woodside, top 10 producer now. And with the Aussie dollar being so low, I would not be surprised if, a major US company, although they may be a little bit tapped out, or someone like a Shell
here we go.
came through and made a bid for Woodside at, it would cost them around, the current market cap's around, say, 43, 44 US billion. So even at 55 US billion, 20% markup, you're getting them cheaper than what Chevron on that paid for theirs, and you're getting a lot more production. So I think something like a Woodside would be in play at the moment, even though there may be a few hurdles with the FIRB. I actually can't see them blocking it at the moment either. So,
mate, that's good enough. I like that. If I may segue, are we good for a segue?
Yeah, go for it.
Speaking of renewables, China that until a day and a half ago was like the most oversold in a year, the CSI 300. I've got a chart up here for our YouTube viewers as well. The RSI, this is from David Ingles from Bloomberg, fantastic guy. The 14-day RSI, relative strength index, was well and truly below the 30. As a general rule, if you buy under 30 and sell above 70, you've got a pretty good chance of going okay, or sell above 80. Anyway, whatever it is, pick your number. Usually that sort of goes okay in a ranging market. You should be okay. Something like this is just going out. Now, China came out with their stimulus package yesterday. It was China rolling out a stimulus package, fresh stimulus package to support its economy in a fresh sign that the ruling Communist Party, they in charge, is growing anxious at the sluggish performance over recent months. Last night, the government confirmed that it would issue sovereign debt worth around 0.8% of GDP. Wow. To support infrastructure investment in areas hit by natural disasters. That means that that is actually, and it has been confirmed, that it is more into the renewable side. So the stimulus will propel growth in sectors that the government favours, such as advanced manufacturing and renewable energy, while ensuring debt levels won't increase dramatically. And that was a former insider that was Zhu, who I think used to be on the IMF, but also used to be pretty close to the relevant people that matter in that particular one. I actually didn't put his full name down. That's really rude on my part. I'm sorry about that. So that's renewable. That's China. This is China actively and openly saying we have had natural disasters strike. We are associating that with the stuff that we have done. These are the infrastructures that we would like to support as the CCP at a government level, at a state level. Renewables is one of those ones as well. If you think that is a small sector that you shouldn't think about, then you're very much mistaken. Now, over to you. Sorry, I took too much.
I was actually listening to a very good podcast yesterday, Forward Guidance, if anyone has heard of that one before. And they had one focused on the Chinese economy and how it's structured and how it's different, etc., to our own and most Western countries. So it's worth a listen if you want to get into the weeds of the Chinese economy and have a listen to that. It's good Forward Guidance. Obviously, listen to this one first and then head on over to Forward Guidance. But I'll chat a little bit about earnings because we've had some pretty important earnings this week. I'll just bring up the chart on Microsoft.
See what I did there? Smooth production. I got your chart back up when you were all ready to go, mate.
You're in tandem there. We're in tandem.
I'm getting it.
So basically, what do you got here? That's Microsoft.
Evening star formation. I'll be assured.
Yeah. Well, look at the breakout there. The what do you call it? The open I had yesterday on the back of some very, very strong earnings. They beat across every line
So that's
earning,
Microsoft. Sorry, yeah.
yep,
Okay.
Microsoft, yep, 299
Yeah,
versus
I wasn't sure of that.
266 EPS. Revenue came in much higher, plus 13%. Cloud grew much faster than anyone expected at 29% growth versus 26% expected.
Azure.
They just made a note that AI still isn't integrated into most of their products, but they're seeing a lot of demand and a lot of people asking for it. Obviously, they're expecting around 26 to 27% growth in cloud for their full year 24. Remember, this is their Q1. Microsoft have a funny reporting period, so this is their Q1. So for the rest of their financial year, expecting 26 to 27% growth, and they now have 320 million users on Teams, which surprised me a bit. That's a huge number of people using Teams these days. So that's become very well integrated into our
Come on. Remember
everyday
that?
lives.
Who was telling me about this yesterday? That Zoom. Remember that just it all happened all at once. Almost every single company in the world during COVID. We're all on
Yep.
Zoom. Zoom was good. Click, click, click. Meeting. And then all of a sudden, just as one consciousness, we all just went, well, Teams is right here. We're just going to use that.
Exactly.
And we just switched across into Teams. They put an add-on in Outlook that just made it very easy to use, and it was all there. And integrate, and we all went there.
That's the beauty of Microsoft, because we're already using Word, Excel, etc., Outlook. It's all comes together and makes life very easy most of the time.
Well, it was phenomenal.
As much as technology can. Yeah.
So
the next chart.
Where Microsoft. So I'm going to give you a segue. I'm doing the. Just give me a chance, mate.
Go for it.
Where Microsoft's cloud seems to be in the sky, you can see that Google's cloud is not so much in the sky. More like clouds in my coffee.
We just lost half our listening audience.
Thank you for the 6 people who are still listening to us.
The Google. Sorry,
Google.
Actually, I watched the movie The Internship, the other night with Owen Wilson and the thing. Very, very funny, and referring to everything as on the line and the Google, the Facebook. It's fantastic. But yeah, we've seen Google go the other way. They did beat on most lines, except their cloud growth came in weaker than expected. And they got smashed 10%, which I thought was extremely harsh given how good the rest of the report was. But yeah, down 10% last night on the back of that. But advertisers are returning. Google search saw double-digit advertising growth for the first time since the first quarter of 2022. And YouTube saw growth as well, but obviously search makes up most of that. So that's with the highlights for Google. And the last one I want to touch on, in a similar vein, and I think these guys have surprised most over their performance of the last 12 months, is Meta. And what a turnaround Meta has had in the last 12 months of their business. They smashed every line. They saw revenue growth of, let me bring my notes up. They're not coming up. Where are they? Revenue growth of 23% versus the same time last quarter. Operating margin at 40%, so the best in 2 years. Again, advertising drove this. But here's a really good stat for you. Reels, you know that new function in Facebook and all their products, Reels? Well, that
everything I do is in Reels.
Yeah, Reels is causing people to spend 40% more time on Instagram than usual. So people are spending 40% more time on
Reels,
Instagram than they used to. Yeah. And so that's why the advertisers and that have come back. They've got more eyes on the screen, watching these reels. Watching you do your thing on there, and it's been a fantastic turnaround. Of course, their VR Meta stuff is still burning a hole in their pocket, still nowhere near profitable. And they said, "Don't expect."
It does look better than it did when they first launched it, though. So
yeah, it did. It did. I mean, that helps when you lay off 21,000 people, though, too. So, but yeah, it's a great turnaround story, Meta, and it's looking good. Their guidance for the Q4 was $36 to $40 billion in revenue, and the market had them only at around 35, I think. So, and that's compared to 32 billion in the fourth quarter last year. So, it's been phenomenal. You go. Sorry.
With the clock ticking, I wouldn't touch them with a barge pole. The massive legal issues on the downside, being sued left, right, and centre for everything that they've got going on. Way too much legality, sovereignty risk, or whatever it is for people who just want it. They're perennial kicking boy for everything. Now, NFL tips, you're up first. We both lost last week by a lot. What have you
terrible.
got?
One was terrible. I've gone a safe bet this week. I've gone the Eagles at the line at -6.5 versus the Commanders for $1.86. I think you can safely put that one in your back pocket.
Put the Eagles. So you're backing the Eagles now. I've got celebrity tips here coming in from Dank Trader 4000.
Dank Trader,
long time listener of the show. He actually starts off by saying, "Don't listen to Pete from Brisbane on the financial insights. They are brilliant." Thank you very much. That's all I needed to hear. However, your NFL teams suck. Your NFL tips suck. Thank you very much. Well, more or less. I'm paraphrasing. Now, a few potential cheeky ones. So I've got one here. All underdogs in order of likelihood. I'll go the first. I'll go. You know what? I'll go the first one. You get one chance at it. This is like it's some punter on the phone is calling the fund manager. He's got an idea. You get one idea. It better be good. Here we go. He's got Minnesota. Oh, the Vikes. He's got Minnesota +3 at Green Bay. Man, that's good. Green Bay's offense are in a slump, figuring out rhythm. Somehow, the
Vikings beat
are
49ers.
Underdogs going in despite Kirk heating up and the defense bailing. His second bet is also he's got Cincinnati +1 at San Fran. That's all we got. That's all for the show, mate. Have you got anything to add?
No. Oh, except lithium's still hot. We got what's his, SQM coming in with a $1.6 billion bid for Azure Minerals here on the ASX. If you'd held that one 12 months ago and still hold it today, you've made 1,430% return. Not bad for those baggies.
And I saw what's his name? I actually know who the guy is. He's got a no. It's talking about PL. It was talking about he was noticing that UBS is a buyer, a strategic buyer for AZS. UBS is a strategic buyer AZS. He reckons it's they're buying for what's the face? Gina.
Creasy.
On that one. AZS. So he's pretty happy there on that one. The other one that I was going to say, yes, RBA are going to hike on Melbourne Cup. I called this I sent it to clients on Monday. It hit LinkedIn on Tuesday. It went onto Stockhead on Wednesday. And as all of the banks have now come full circle and they think that there's a hike on it. It went to 80%. Michelle talked it down in the morning this morning, and it's now at about 55% chance of a hike. I reckon she's going to do it. It's going to be up. She's got 7 years to redeem herself after this. This is just one hard one. We're not mucking around. We actually think that there's a reason to hike. I'm going to do it. We're not fooling. It's her chance to say we're not fooling around.
I actually think the opposite. I think she'll hold. I think
put a beer on it then, my friend.
Like she would have said more this morning and said she seems like she was talking it down. I think yields are doing their job for her. 4.8% here in Australia on 10-year with a cash rate at 4.1. They don't need to do anything. So
okay,
yeah, hold for me.
Okay, I think it's more just about I'm playing the man, not the ball on this one. I think it's just more about that sentiment of who you're dealing with. Right, we're past our time limit. Thanks everyone for listening to us. Tune in later. Send more questions. Send more footy tips. Thanks everything. G'day, Pete from Brisbane. I hope you're listening.
Have a good one. Have a good weekend, guys. Bye.
See ya.